right, here we go again. Another episode of the Route 39 Market Beat. And Jake and Brian, we are buckled up, ready for a great show. Roundabout's coming up, and then we'll find out exactly where Steve's been traveling on the road again.
Okay.
But Jake, if you remember last time, we talked about transports.
Yes, we did.
Tell us a little bit about what we've seen since then.
Well, as far as the economy goes, we mentioned that there could be pockets of weakness in different areas, but we thought transport would be an area of strength for investing, and that's really what we've seen in the charts.
So this episode, we're going to be looking at something a little bit different. We're going to be looking at consumer staples, products that people need in their everyday lives. So where are we headed right now?
I can't tell you. You asked me this in the last video, and the answer is still it will ruin the intro to the show.
All right, well, let's get there, and we'll find out.
Okay.
All right, well, here we go, Jake. We are at our destination. It's the Hanover-Dale Agway off of Route 39. You know, this is a place a lot of folks would probably shop, but you might not have thought about this as a consumer staple. Many folks might have thought, hey, we might be going to a grocery store or something along those lines. But you can find consumer staples like pet food and pet care products here at the Hanover-Dale Agway. So let's take a look inside after we get parked, and we'll see just how the economy is doing in terms of the consumer staples sector. All right. So Jake, really fortunate to be able to do stuff like this because we're able to talk to these owners of these businesses, like Ben, great guy here, and they're really able to give us some good insight on what they're seeing. So we get down right to the root of everything. And what did he tell us?
I would say there's probably two key takeaways. The first one is that they haven't seen a slowdown at all in any of their products or anything with the demand since COVID. And he said that the reason is because the area that we're in and the fact that they're selling things that are actual necessities, the feed, the seed, and especially the pet food. All these things tie into what this business is, but also really ties into the area of consumer staples, not just the food products, but also those home goods that people can't go without.
Yeah, and I know when I drive by every time here, parking lot's always packed. Of course, the nice weather helps, but ties into everything we've been saying about where we see strength, and that's consumer staples, and the store here is certainly evidence of that.
And sneak peek, we're tying that into the portfolios.
Well, Jake, we're here at the roundabout, and that's our next segment, but that was a really productive trip, very informative, and I was able to pick up some green apple licorice bites for me and some dog treats for Griffey.
That is awesome, but I think what's most important is the fact that we got to talk to a local business owner, find out what he's hearing and what he's seeing, and make that connection and then provide the viewers with that information.
It's all real world connections, and we're very pleased to be able to do that. So let's get to our next segment, the roundabout. But before we do that, It's time for a commercial break. Okay, and it's time for a roundabout. Here we take a quick, fast-paced 1-minute look at 5 different topics, anywhere from where we think the market may be headed to our portfolio construction. The first segment is called Talk Radio. Jake and Steve will have 1 minute to answer a question that was submitted from a viewer. This one comes from Stacy in Camp Hill. Stacy says, it seems like for the past couple of weeks, the market's just been going up and down, up and down. What's going on? Why is that happening? Jake and Steve, can you explain?
Stacy, that's a great question. And honestly, thank you for viewing our show every single time we put it out. You're one of our best fans. But to answer your question, short to the point, I would say that this is an election year and volatility is pretty typical in these standards, right?
I agree, Jake. Volatility is the standard in an election year. Who's going to win?
I don't know. And that's kind of why you see that volatility. There's a lot of indecision in the market.
I always like to tell people in these situations that I can guarantee you that the market's going to either go up, down, or sideways.
One of those three
One of those
is bound
things
to happen.
is going to be right.
I would say interest rates probably lends a little bit to the volatility too.
Definitely does. You know, what's the Fed going to do? Who cares? But people do. But yeah, it's just summer months coming up and election year cycle. We're going to see the up, the down.
Jake and Steve, well done. You kept it under 1 minute. Excellent job. Keep it going. So now we're going to look at red light, green light. This is where we see areas of weakness, red light, 4 areas of strength, the green light. So, Jake and Steve, what's one area that we believe there to be strength, and what's an area where we believe there's a little bit of weakness? You got 1 minute. Go ahead.
I like this because this fits perfectly into our bubble chart up here. Red means stop, green means go. And energy has been a red area, a stop, because we've seen that drift from performing well down to the area at the bottom where it's not performing as well and it's starting to break down on the chart. So what would you say is an area of strength or a green go right now?
Yeah, I mean, to correspond with what you've said there, months ago we were talking about energy being strong.
Mm-hmm.
Gas prices were high. Now we've seen oil come back down. Complementary to that has been utilities being weak, but now they've turned up. And what I find really interesting about this is that we've been hit a lot with the whole AI and what's good and what's going strong there. And last time we did highlight semiconductors as being hot.
Mm-hmm.
Now, utilities, they're going to be busy trying to generate all this electricity for all of those.
Yeah, powering the data centers
Yeah.
for sure.
Right, again, 2 for 2 here. So under 1 minute both times. I'm not sure you're going to be able to go 5 for 5, but we'll see. We're moving on to off-road. This is something where you might not hear about this information in the news, something not too many people are talking about. So guys, what's something that not a whole lot of us are in tune with right now? Let's go off-road.
Well, if you haven't noticed by now, we're not in 2 separate rooms. And the word on the street is that it's a lot better this way. 2 for 2 on the time limit. We're baseball guys. That's a good day at the plate. I'm willing to try to swing for the fences here. Let's see if we can go over on
Let's
this
try.
timeline.
Let's try.
Okay, so off-road. You see on the news that the recession's going to hit. It's been saying that for 2 years now, and that consumers are feeling the pain in their pockets. But driving down 39, I'm not seeing that. I'm seeing people everywhere.
Yeah, I agree with you, Jake. I think that a lot of times we forget that GDP is 70% consumer spending.
Mm-hmm.
And when you go out, there's no shortage of lines. I can't go to Costco without there being jam-packed.
Getting run
Parking
over by
lot,
cars
yeah.
and then people
Yep.
in Costco.
Yeah, so I think the whole idea of recession is always going to be part of the story. As a matter of fact, 2 years of an inverted yield curve has supposed to tell us that we're in a recession already, and it's just not happening.
Not happening yet.
So I think that we want to try to continue to watch what the consumer does from here on out.
Okay.
All right, well, I knew it would probably be too good to be true. And just like that, they're over by 6 seconds. That's okay. We have another shot coming up. Jake, this is all you. It's road work. Explain what we're doing in building or constructing our portfolios. 1 minute, go ahead.
So we're on the theme of consumer staples. And when we look at the portfolio construction, we've been adding to a couple different companies, but we're going to focus on specifically one, which is Kimberly-Clark. Now, you might not be familiar with that name, but I'm sure you're familiar with Huggies, Kleenex, Cottonelle. Those are all brands of Kimberly-Clark. We're going to focus on 3 things today. I'll keep it brief. The first is that Kimberly-Clark is paying you a yield over 3.5%. We actually bought it before the last earnings, and that's why you see this big jump up here in the company, because they beat expectations. But I want to flip to just a longer term view of the chart, because we always like to look at these longer time frames when we're trying to buy these for a longer period of time to see what's really going on. And you'll see a sideways move in the chart right here in this area. Typically when we see that, it's what's called a consolidation, and prices are going to break up or down. And we believe that this is a chart that the price is actually going to break up. So we like holding this longer term over the next 12 months, and we're going to see what happens.
Jake, excellent job there with road work. Nailed it on the time. And talking about Cottonelle, Huggies from Kimberly-Clark, a friend told me that Cottonelle's some of the softer stuff out there. So great stuff. Let's take a look now at the road ahead. Steve's going to explain where we think the market's going here in the next several months. Steve, you have 1 minute.
First thing I like to do before we get into the road ahead is go back to what we talked about 3 months ago. And the chart we had put up there was talking about how the Dow had moved so far off the bottom and that we were due for a break. When you see this chart now, it shows you that we did take that break. We came back down a little bit. Now we've moved back up to that point, and then since have come down again. The exact definition of the volatility we were expecting with the election year and the summer months coming up. So what does it look like going forward? Well, we've created a range here, and the big question is whether or not we could stay within that range. The summer months, there's a lot less volume. A lot of people are on vacation, not as many traders at their desks. But leading into the election cycle, there could be some fear there that pushes this even lower. Bottom line is we have some downside in the cards, and the upside just doesn't seem as attractive over the next few months. That doesn't mean to get nervous. It just means to hang in there, get through the next few months with us as we actively oversight your portfolio. And there will be better buying chances ahead as we adjust what you own today.
Steve and Jake, great job. You were 3 for 5. That's a pretty good batting average if you're playing baseball. But that's going to wrap up Roundabout for this episode. Next, we're going to take a look at where Steve is in all of his world of travels on the road again. But let's pause real quick for a commercial break.
Graham Slam? Yes, please. Absolutely. It's the best flavor ever alive.
What are we doing here?
Just
The ice cream social's over.
perfecting my craft. What do you mean? They wanted some Graham Slam.
Oh, Jake, I'll give it to you. Jake, you are the best ice cream scooper there was. And the ice cream social was a great hit. We found that events like this are a great way to meet new faces and folks that we might be able to help. So at our next event, make sure you bring somebody along. But for now, you guys need to get back to work.
Okay. They said I wasn't good enough. I need to get better. Next year, I'm gonna have a hat. My forearms are gonna be stronger. I'm gonna scoop so much ice cream at the ice cream social next year. You guys won't even be ready.
And I'm on the road again, actually in the car this time. And if you remember, we talked about transports. I was at the beach, things were busy. We thought that things were getting transported and people were traveling. Well, this time we're talking consumer staples, and consumer staples are similar to the fact that people spend, but more on what you need. And so we're at one of the most popular places in town of what you need. That's right, it's Costco. And I'm sure just like your local Costco, the one near us is always crowded. People buying in bulk what they need. And when you look at consumer staples and the chart over the last month or so, you can see that it's been holding up fairly well with some volatility in the market, but it's also been doing well over the past few months. So when you come into an area of volatility and you notice that this sector is outperforming, it tells you something. It says volatility could be ahead, and a lot of investors are putting money in places where they want to be invested, where people are buying things that they need. Costco is just one example. There's others out there. One of the most important areas of consumer staples is getting your hair cut, and it's one of my favorite things to do here. As you can see, Frank of Roma's Barber is here to take care of what you see as a pretty moppy head. I'll show you the after effects when we're done. Here we are. Frank, you did a great job. There's his counterpart, Fred, back there. Frank, what do you have to say to all those people? You've been busy?
I've been busier than hell. I'm retired. I'm shutting the shop up in about 20 minutes. And goodbye, everybody.
The end of the consumer staples. There you have it, right from the horse's mouth. Thanks, Frank. Where else would we conclude but the grocery store for consumer staples? I'm going to grab me some consumer staples in there, maybe some discretionary items too. We think Staples is a good place to be. Have a great summer.